Good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. Today, the 26th of May. Anyway, a few things this morning out. Singapore announced their first quarter GDP came in at a stronger than expected number. Interestingly, we did not see a reaction on the upside for the Sing dollar. In fact, the dollar Sing sort of moved up. And this move up actually is a continuation of what happened yesterday when Singapore announced very weak inflation numbers for last month. We saw it. We not only saw it breaking through the psychological 134 level, but we are seeing it continuing its upward move, perhaps testing or perhaps to test this next key resistance of around 134.7, 134.9, which is also the 50-day moving average. Interesting move despite the strong number, and perhaps suggestions that there may be intervention down here because well, obviously the headwinds still remain rather challenging looking ahead. Now if we don't see a breakthrough this, we may see come back to test again the 134 psychological level reflected here by this line, and possibly breaking back down again. Whatever it is, it's the story for the day, at least for this morning, until the Hong Kong markets came on live. Hong Kong, as most remember, were on a break yesterday, and immediately we are seeing big reactions on the H shares index, represented by this number here, which is up 274 points, or up about 2%. China A shares moved very sharply yesterday on the upside, and we are seeing a catch-up play down here on both the Hong Kong shares, Hang Seng, represented by the Hong Kong 43, and also the China Enterprise Index, which is also the H shares index. Needless to say, some of the big performances or big moves in the morning include, on the upside, as we see here, include some of the banks, some of the industrials, and early this morning we also saw a very big, including the airline stock here, which saw, well, China Southern was almost limit up in Shanghai yesterday, and also the Hong Kong Exchange, as speculation continues with regards to a Shenzhen Hong Kong Stock Connect. The A shares index, which powered through this last high of around 14450, breaking with this green line, is perhaps seeing a little bit of a consolidation of that huge move. If you were to look back, the last 5-6 days of move, we saw the index track up close to, well, almost 1,500 points, or rather 10%. So this is a very huge move which enveloped this last month and a half of decline. It could be a bit of short covering, could be a bit of momentum coming through, but it's something that we can't ignore. We've been reasonably cautious down here. After this break, have to ultimately trade with the flow, and the flow seems to be on the positives down here. Now, if today's candle were to break back below this previous high of 14450, this could represent a false break, and if it's a false break, if momentum comes in, we can see it pull back to around here. Otherwise, the near-term target on the upside remains 15,160, represented by this line down here. Just a quick mention also towards the close, or towards the end of this YouTube, the euro dollar has actually broken below the channel, like I mentioned in yesterday's YouTube, but well, obviously a big reason for that has been some of the political rumblings that we saw happening in Spain, which suggests that there is a stronger than expected left-wing support, and that support presumably has come from looking at what's happening with the Greek situation. Obviously the contagion issue could blow if a stronger left wing gets represented in Spain, and it's something which we're keeping very much in sight, in view of some of the big shocks that could happen down there. But besides that, markets are just starting to come back after a long weekend, especially for some of the major markets. Thank you very much.